Good day, learners. Welcome back to my channel. So for today, we will be continuing our discussion of accounting for property, plant, and equipment. This is the part 3 of our discussion of accounting for property, plant, and equipment. So if you're now ready to learn something new, we will start. So the third part of accounting for property, plant, and equipment focuses on some other related standards to PPE accounting. So for our first video, we will be discussing exploration and evaluation, and at the same time, depletion later on. So exploration and evaluation, guys, is governed by PFRS 6. According to PFRS 6, ito yung steps in doing mining activities. And then the first step is prospecting. You look for potential sites or potential areas where to conduct your mining activities. Number 2 step is exploration. So titingnan mo kung meron bang mga natural resources doon sa site na napili mo. And then we'll do evaluation. Is there a feasibility and viability sa ating area? Pwede bang mag-conduct ng mining activities doon? After evaluation, if you already achieve economic feasibility, technical feasibility, and commercial viability, we will start the development of the location. So after development, this is where you already produce or extract natural resources from your mine. And the last step is very important. After mo mag-extract ng mga natural resources, make sure that there should be closure and rehabilitation. Meaning, you need to revert back the location to its original form. Okay? So, kailangan i-rehabilitate mo siya. Okay. So PFRS 6 only governs exploration and evaluation parts. Okay, so ito lang yung scope ng PFRS 6. All the others, hindi yan sakop ng PFRS 6. So what are exploration and evaluation expenditures? So these are the search for mineral resources, including minerals, oil, natural gas, and similar non-regenerative resources after the entity has obtained legal rights to explore in a specific area. So, una dapat meron kang legal rights to explore, which you do during the prospecting phase, as well as the determination of the technical feasibility and commercial viability of extracting the mineral resource. So, exploration and evaluation expenditures are expenditures incurred by an entity in connection with the exploration for and evaluation of mineral resources before the technical feasibility and commercial viability of extracting a mineral resource are demonstrable. So all expenditures before technical feasibility and commercial viability are what we call exploration and evaluation expenditures. So, to account for exploration and evaluation expenditures, PFRS 6 permits entities to develop their own accounting policy for exploration and evaluation assets, which results in relevant and reliable information based entirely on management's judgment and without the need to consider the hierarchy of standards in PAS 8, meaning the entity may recognize the exploration and evaluation expenditures either as expense or asset depending on their own policy. So, pwedeng expense, pwedeng asset. Depende sa company. So, to measure, if for example, you choose to measure it as an asset, the initial measurement is at cost. Ito normally yung mga pasok sa initial cost ng exploration and evaluation asset. So we have acquisition of rights to explore, topographical, geological, geochemical, and geophysical studies, exploratory drilling, trenching, sampling, activities in relation to evaluating technical feasibility and commercial viability of extracting a mineral resource. But take note that these are not exhaustive, meaning basta in relation siya sa exploration and evaluation, then that is included in the initial cost. Subsequently, yung asset na yun will be measured using the cost or revaluation model and must be applied consistently. And they need to be classified as either tangible or intangible according to their nature. Pero regardless kung tangible or intangible, cost or revaluation model pa rin. Parang how you measure PPE. So now we go to depletion. Okay, so accordingly, depletion is the periodic amortization of wasting assets such as mines. So yung mga mining areas, we call them wasting assets. It is a systematic allocation of the cost of the natural resource or wasting asset. So para lang din itong depreciation, it's just that it pertains to a wasting asset. The computation of depletion expense is an adaptation of the productive output method of depreciation. So normally, kapag we compute for depletion, the method that we use is the output method based dun sa ilan yung napoproduce or na-extract na mineral resource. So depletion, when structures and improvements are constructed in connection with the removal of mineral resources and their usefulness is limited to the duration of the project. For example, naglagay ka ng building, pero it will be only limited during the mining project. It is reasonable to recognize the depreciation on such properties using the output method. So, output method siya. But, when the structures and improvements provide benefits expected to terminate prior to the exhaustion of the natural resource, ibig sabihin, nauna pa or shorter pa yung life niya kesa dun sa duration ng project, then the cost of such improvements should be allocated on the basis of the number of units to be extracted or produced or on a time basis, whichever is more suitable. So either output or straight line, whichever is more suitable. Normally, mas suitable kapag gumamit na lang ng straight line using the life of that asset. Equipment used in the exploration and development activity should be depreciated using the shorter of the life of the natural resource or the life of the equipment, provided the equipment will be of no use after the natural resource has been totally exhausted. So sa mga equipment naman, if wala na siyang gamit after the mining activity, then ang depreciation niya ay shorter ng life ng natural resource or yung kanyang sariling life. Pero, if meron pa siyang significant use after the mining activity is over, the equipment should be depreciated using its own estimated life. Okay. So how do we compute for depletion now? The depletion rate, we first compute it to identify the amount of depletion expense per unit of output. This is the computation of the depletion rate. The depletion rate is equal to the total cost of the wasting asset less residual value divided by the estimated resource deposit to be extracted. So, kung ano yung makukuha nyong rate, yan yung i-multiply nyo sa ma-extract na resource every year para makuha natin ang total depletion expense for the year. The total cost of the wasting asset consists of the following: acquisition cost or the purchase price of the property, exploration cost, yung pinag-usapan natin kanina, costs incurred to locate the minerals and other resources beneath the surface of the property, development costs or those costs incurred for the actual production or extraction of the minerals and other resources. Development cost is naturally incurred multiple number of times during the period of production and will usually cause the recomputation of the rate. So kapag nagbabago yung cost, there is a recomputation of depletion rate, and take note, we use it as a change in accounting estimate or prospectively. Development costs related to other tangible assets should not be capitalized as part of the wasting asset rather than as other items of PPE and depreciated separately. Example, yung mga equipment, machinery, and processing facilities. So itong mga to, hindi mo siya i-capitalize sa wasting asset, kundi i-recognize mo siya as a separate PPE item. Hindi siya nade-deplete, kundi siya ay nade-depreciate. Yung rules ng depreciation, yung mga sinabi ko kanina. And lastly, restoration cost. This is future cost to be paid to restore the property back to its original condition, but recorded as a liability that is estimated. So, ang measurement niya is at present value. Don't forget, present value. Para tong estimated dismantling cost sa property, plant, and equipment. Let's have an example. For example, land containing iron ore is acquired at 50 million pesos with an expected residual value of 4 million pesos at the end of its useful life of 5 years. Geological estimates after exploration activities expect that 2 million tons of iron ore can be produced. The following information has been gathered for 2 years of mining activities. So these are the information for exploration cost, 5 million year 1. Development cost related to extraction, 7 million for year 1, tapos nadagdagan ng 3 million for year 2. Expected restoration cost, 3 million, but the present value is 1,800,000. Tons produced, 300,000 for year 1 and 400,000 for year 2. Tons remaining, 1,700,000 for year 1, kaya ang total niya 2 million as what was estimated. Pero for year 2, ang tons remaining ay 1 million na lang. The tons sold is 100,000 for year 1 while 500,000 for year 2. And development cost, which is related to equipment, is 5 million pesos. Residual value of equipment is 500,000. And useful life of equipment is 10 years. So these are the requirements. A. Compute for the accumulated depletion at the end of each year and the depletion that should be included in cost of sales for the same period. So depletion for the year and cost of sales for the year. Compute for the depreciation expense each year if the equipment has a future use. So for the equipment. Letter C, compute for the depreciation expense each year if the equipment has no future use. And D, suppose the equipment has a useful life of 4 years, compute for the depreciation expense each year. Okay, so let's start with computing the accumulated depletion and cost of sales for year 1. So for year 1, the cost of wasting asset consists of the acquisition cost, 50 million. Then we have exploration cost, 5 million. Development cost related to extraction, 7 million. Take note, yung development cost related sa equipment, hindi po siya part ng wasting asset, kundi siya ay may sariling PPE item. Present value of restoration cost, 1,800,000. And then less the residual value of 4 million. Ang ating total ay 59,800,000. We divide it by the expected output, which is 2 million. Ang depletion rate natin for year 1 is 29.90. Dahil 300,000 yung na-produce during the year, so that's times 29.90. The total depletion for the year is 8,970,000 pesos. And the cost of sales is, dahil 100,000 yung nabenta out of the 300,000, the cost of sales is 100,000 times 29.9, or that is 2,990,000. Okay, now let's go to the accumulated depletion and cost of sales for year 2. Take note that there was an increase in development cost for year 2, kaya we we account for it prospectively. So, we compute first ang balance niya as of this year, as of year 2. Yung cost niya last year is 59,800,000. And then we add the additional development cost of 3 million. And then we also deduct the prior year's depletion of 8,970,000. So yung numerator na lang natin ay 53,830,000 as of year 2. And the remaining output is not 2 million. So iba na yung i-divide mo, 1,400,000 na. Ito na yung 400,000 daw ang na-produce this year, tapos 1 million for the succeeding year. So ang total, 1,400,000. Take note, if we account for it prospectively, hindi na natin kinoconsider yung mga past data. So ang kinoconsider lang natin is yung current data and the future data. So ang bagong depletion rate is 38.45. Therefore, the depletion for the year is 38.45 times 400,000 yung na-produce during the year. That's 15,380,000 pesos. The cost of sales is computed like this. Last year kasi, diba, 300,000 yung na-produce, pero out of that 300,000, 100,000 lang yung nabenta. Meaning, meron pang natirang 200,000 worth 29.9, which is the depletion rate last year. So, 29.9 times 200,000, that's 5,980,000 plus yung this year na depletion rate, which is 38.45 times 300,000. So, ang total na nabenta ay 500,000. That's 11,535,000 for a total cost of sales of 17,515,000 pesos. Okay? So that's it for accumulated depletion and cost of sales for first year and second year. Now we will compute for the depreciation. What if the equipment has a future use? Pag meron siyang future use, then use its own life. So ang cost of equipment is 5 million. The residual value is 500,000. Therefore, the depreciable cost is 4,500,000 divided by its own life 10 years. The depreciation is 450,000 every year. Letter C, what if walang future use? Pag walang future use, then use the shorter of the life of the asset or the life of the natural resource. So, the cost of the equipment is 5 million. The residual value is 500,000. So, the depreciable cost is 4,500,000 divided by the shorter life, which is shorter between the equipment useful life or the wasting asset life. Yung useful life 10 years, yung wasting asset life is 5 years, so we use 5 years. Therefore, the depreciation every year is 900,000. Letter D, what if the life of the asset is 4 years life? Then shorter pa siya sa 5 years life ng natural resource. Then we just use the 4 years. So cost of equipment is 5 million, residual value is 500,000. The depreciable cost is 4,500,000. Divided by 4 years, the depreciation every year is 1,125,000 pesos. So that's how you compute for depreciation in different cases or scenario. So that would be all for today, guys. Now it's your time to test your knowledge. If you know the answer to this question, just comment your answer down below. On July 1, 2019, ZASC company purchased the rights to a mine. The total purchase price was 7,920,000, of which 240,000 was allocated to land. Estimated reserves were 1,600,000 tons. ZASC expects to extract and sell 25,000 tons per month. ZASC purchased new equipment on July 1, 2019. The equipment cost 3,960,000 and have a useful life of 8 years. However, after all the resources are removed, the equipment will be of no use and will be sold for 120,000 pesos. If sales and production conformed to expectation, what amount of depletion and depreciation should the company recognize in 2019 respectively? A. 720,000 and 240,000. B. 720,000 and 360,000. C. 1,440,000 and 240,000. Or D. 1,440,000 and 360,000. So that's it, guys. Thank you very much for listening and watching this video. I hope that you learned something new today. So don't forget to subscribe to my channel, like, comment, and share this video. And I will see you in the next video, guys. Bye!